pleasure now to bring on board Mr. H.M. Bangur, Managing Director of Shree Cement. And I'll say something which will make you very, very happy. We were discussing that what the Shree Cement stock was 20 years ago. Do you want to take a guess? Bangur Saab, where was Shree Cement 20 years ago?
I know in 2005, it was around 50 rupees.
Hello. 2005, it was 50 rupees. Let's look at the stock price right now. In 2005 is only 20 years ago. It is not once upon a lifetime. I mean, I was certainly on as a, I had certainly joined the ego. It is not an error, okay? We are talking about Trend being a great compounder. We are talking about Bajaj Finance being a great compounder. Here's a cement company, which is a commodity company, exposed to competition, exposed to GDP growth, exposed to what happens to world, and they've really managed to hit out of the pack. Congratulations, sir. I mean, it is absolutely amazing. Nobody talks about it. We'll have to talk about NBFCs, startups, consumer companies, manufacturing companies, but you're a cement company, and the kind of wealth you've created for shareholders, it is extraordinary. I mean, the more I talk about it, the less it is what you've achieved in the last 20 years.
And now video is okay?
Yes, sir. You didn't hear me what I was saying.
And then I heard you everything, but there was nothing to reply.
Your smile says it all. Okay.
So you could tell us where the stock is headed in the next 10 years and whether the next 20 years are going to be as magical a journey as it's been from, $50 where the stock was in 2003.
Now, next few years, nobody knows what will be happening tomorrow.
No, we are not talking about 2nd of April, sir. That Donald Trump would know.
That only he will know. And how it will affect the whole world, we don't know.
Okay. Let's look at last 5 years, Mr. Bangur. Indian GDP is growing. India's...
Yeah.
Can I ask you a question? I mean, you okay?
You can.
Okay.
We are not on the air, na?
We are on air, sir.
Okay. You ask.
PCR?
No, go ahead.
Okay. My question to you is that in last 5 years, GDP has done rather well. Government capex has been strong. Post-COVID, every sector has revived. But if I look at cement prices are very stagnant. Why is that?
Cement prices are stagnant not only for 5 years, but if I see last 10 years number, the cement price CAGR is only 1.1% or so. In 10 years, it is only 12% increase. So,
We were just, mesmerized with the way your stock has moved. And in fact, the entire sector has done well. Given that in the near term, Mr. Bangur, there are some growth concerns with regards to slowdown in the economy, where do you think next 1 year, considering cement as a, as a commodity is so closely linked to GDP, where do you think the next 1 year is headed for the entire industry?
You are perfectly right that cement is totally linked to GDP. Now, we expect GDP to grow by 7%, 6.5%. These are the numbers what all economists give. And cement grows at 1.2 times the GDP. So, cement growth will be somewhere between 7.5 to 8%. This is what I understand. So, this will be the growth for the cement industry.
But my point, sir, is that GDP is growing, but cement prices should at least grow in line with either GDP or with inflation. Last 3, 4, 5 years, cement prices have been flat. Why is that?
Good. This is the question I wanted to hear. For the first time, somebody is saying that cement prices are not increasing. Otherwise, normally the news is cement price increased by 5 rupees, and when it decreases, nobody talks. So cement price in last 10 years have increased only by 1.1% CAGR. All the gains which are being made by cement companies is because of the better technology, better logistic control, better efficiency. But still, the return on capital in this industry is low. That's why new units are coming at a slower pace compared to the past. Definitely the units are coming. Everybody is having hopes that future will be much better. But at these prices, most of the industry is not making good money. That's all I can say.
There is a lot of consolidation which has happened in the cement sector.
Hmm.
And that consolidation historically, if I look at steel, if I look at any other sector, the consolidation has happened in the past, it leads to pricing power. But despite this consolidation, where Birlas have bought the small units, Adanis have bought the small units, pricing power is not coming back. Is it because of competition?
So the competition will always be there in every commodity, but the pricing power, we are having some time gap. It has to have some time gap. Consolidation is still taking place. Pricing power may come in a 6 months time, 1 year's time. We have to be patient, and we are going in the right direction. That's all I can say.
So let's start drawing parallels, which is that for cement sector demand, for pricing to come back, what needs to change? Do you think it could be consolidation, further consolidation within the sector? It could be a intensity of competition which becomes less, or somewhere cement companies will realize that there is overcapacity, they will not expand, and then automatically pricing will start coming back.
Pricing may take some time. You see, there are two ways to look at it. One, before you put the unit, you see the return on capital and everything. Right now, there is 7 to 8%. But you start the project 4 or 5 years in advance. It takes 2 years time to purchase the land, 2 years to set up the company, 1 year to get all the permissions, about 5 years job after you get the mines. So right, today's prices will not decide the new capacities coming in. But at the same time, once you have put the unit, using the unit to the best possible production level is what everybody thinks. As whatever we do, the marginal cost is always better. So pricing may take some time, but you don't have to see India as such. India is one. There is big difference in North India, South India capacity. In North India, capacity utilization is more than 90%. The prices are good. Nature has given sufficient limestone only in South India, so there the capacity overhang is high. So you have to see India in 4 or 5 zones: North India, South India, East, West. So some of the India is having the pricing power. Part of the India is still has to get it. That's all I can say.
So, wanted to understand then what happens to capacity addition, because, what we understand is that you were looking at almost about, 80 plus MTPA capacity by 2028. Is it online, and what kind of capital allocation would it require?
It is very much online. It may be little earlier than that, but we are having a lot of patience, and it will now 1 million ton requires roughly 1,000 crore rupees. So this is the kind of money company is generating enough cash. We don't have to borrow, or we don't have to raise capital to get this kind of capacity.
So what would be your cash flow in next 3 years? Because capacity expansion in last 3 years versus next 3 years, your capacity addition will be less. So give me a sense of cash flows then.
Now, the cash flow depends on profitability, and profitability will depend on prices. So in commodity, we can have control on the cost, but prices are market driven. But looking at the past trend, I think 5,000 crores should be our EBITDA roughly. Now it can go totally wrong if the prices comes down, but this is the sense for the next year.
Right. Mr. Bangur, M&A is what's been the driver of your industry. Wondering whether or not Shree Cement would looking at acquiring at any, any company or anything that you have, your eyes on.
We are having eyes on every merger acquisition which comes, but we are far away from the prices at which it is going. We are too conservative for this purpose, it seems.
Mind is a fair price EV per ton in if you
I
have to-
am nobody to comment about others' fair price. My prices will be much lower, at least about 70 to 80% at which the units are going. So I will not comment about what others are thinking, but for me it will be little high. So I will wait till we get the right price at or the assets at the price which I think is fair. But others are thinking unfairly, that is also a wrong comment.
each one to their own judgment. Like you said last time that घर का खाना ज़्यादा अच्छा होता है. So I think that is what you're sticking to.
You remember it.
Yes, yes, sir. God's blessed me with good memory, so I remember a lot of things. My next question is that if one really looks at the cement capacity in India versus the cement demand, and I'm adding the next 3 years of capacity addition, which will come from you, which will come from the Birla Group, which will come from, let's say the Adani Group, there still seems to be a 20% more capacity addition and the demand is going to be lower. So why are cement manufacturers across India expanding when there is excess capacity in the system and excess capacity is getting added up more?
Cement industry always has created the capacity about 2 years in advance of the consumption required. This is because of the cyclic nature. In January to June period, the demand is very high. But when we take the capacity utilization, it is for the whole year. Even for a month, if we cannot supply cement to the market, it will be a big problem. So capacity overhang is a industry norm where nobody should be deprived of cement. Secondly, if we have enough cash flow, putting the unit means if you have to put it 1 year in advance, or 1 year later, now you have put it today, your interest cost is around 7%, 8%, inflation is 6%. So your real cost for getting the option that suddenly if the demand comes is only 2%. Shree is having enough cash flow. So you will find that year after year, Shree's capacity utilization is lower, but it is growing faster.
What about geographically diversifying, Mr. Bangur? We understand that you're not into acquisitions, but would you look at expanding given that 60% of your concentration and capacity is in the north part of the country?
Now we are continuously expanding and 60% has come down to around 55%. In East, we have now gained quite a foothold. Now we will be growing more in East, South and North. We will concentrate, become number 2 or 3 in the one zone, then only we move to the other zone.
Good morning, Mr. Bangur. This is Shailu joining in the conversation. And yes, you have your core markets, that is the north and the east area. I wanted to understand and get a sense from you about the cement realizations. How is it looking right now, especially in your core markets and southern market where it's not been that great?
So, as I said, southern market overhang, capacity overhang is there. It may take some time or suddenly the demand comes. So I will not know more about this, but North market is very good. Full capacity utilization by everyone is there. And East market is also improving continuously. It is a matter of a small time, maybe 1 year. But the East market also will have the same thing what North is having.
Great to chat with you today, Mr. Bangur. Thank you so much for your time and joining us today on ET Now.
Thank you.
If you like this video, then like, share and subscribe to ET Now.